Good day, everyone, and welcome to the Blucora second quarter earnings results conference call. This call is being recorded. With us today from the company is the President and Chief Executive Officer, Bill Ruckelshaus, Chief Financial Officer, Eric Emmons, and the Senior Director of Investor Relations, Stacey Ibarra. At this time, I would like to turn the call over to Stacey Ibarra. Please go ahead, ma'am.
Good morning, and welcome to Blucora's investor conference call to discuss the second quarter 2013 earnings and the announcement our company made this morning, the acquisition of Monoprice. A press release announcing the transaction was issued earlier this morning and can be accessed through the investor relations section of our website at www.blucora.com. There is also a slide presentation with additional details regarding the transaction, which is available for download on our website. Before we begin, I'd like to remind you that during the course of this call, Blucora representatives will make forward-looking statements, including but not limited to statements regarding Blucora's expectations about its products and services, outlook for the future of our business and growth initiatives, and anticipated financial performance for 2013. Other statements that refer to our beliefs, plans, expectations, or intentions, which may be made in response to questions, are also forward-looking statements for purposes of the safe harbor provided by the Private Securities Litigation Reform Act. Because these statements pertain to future events, they are subject to risks and uncertainties, and actual results could differ materially from our current expectations and beliefs. Factors that could cause or contribute to such differences include, but are not limited to, the risks and other factors discussed in Blucora's most recent annual report on Form 10-Q on file with the Securities and Exchange Commission. Blucora has no obligation to update any forward-looking statement, which speak only as of the date the statement is made. In addition, during this call, our management will discuss GAAP and non-GAAP financial measures. In the press release, which has been posted on our website and filed with the SEC on Form 8-K, we present GAAP and non-GAAP results, along with reconciliation tables, and the reasons for our presentation of the non-GAAP information. We have also provided supplemental financial information to our results in the investor relations section of our corporate website at www.blucora.com and filed with the SEC on Form 8-K. Now I'll turn the call over to Bill Ruckelshaus. Following his comments, Eric Emmons will review the second quarter results and third quarter outlook. Then we'll open up the call for your questions.
Good morning. We posted strong double-digit growth across both of our business units during the second quarter. Before I review our operating results, I would like to discuss the transaction we announced earlier this morning. Blucora has entered into a definitive agreement to acquire Monoprice in an all-cash transaction valued at $180 million. Monoprice is a rapidly growing, profitable company with a significant market opportunity. The addition of Monoprice strengthens our growth profile, diversifies our sources of revenue and profits, and brings exposure to online retail, where global shoppers continue to migrate for decision support, enhanced selection, convenience, speed of delivery, service, and price. We have prepared a brief presentation introducing Monoprice and direct listeners to our webcast where they can follow along. We have also provided an electronic copy of this presentation on the investor relations section of our company website should you wish to review separately. We are acquiring privately held Monoprice for $180 million in cash. This transaction is immediately accretive to earnings per share. We expect to close in the third quarter following customary closing conditions. This transaction was sourced and executed by our internal corporate development team and is consistent with our business and capital deployment objectives. Monoprice really fits our culture and company DNA. The parallels with TaxAct are self-evident. An emerging online franchise in a large market, providing quality products at great prices with fantastic service and support. Like TaxAct, Monoprice customers are passionate evangelists of the company and its products. We are tremendously impressed with the Monoprice management team, led by CEO Ajay Kumar, and truly believe they are in the early innings of tapping a great opportunity. This is a fast-growing provider of quality, attractively priced electronics and accessories for consumers and businesses. Established in 2002, Monoprice leverages direct relationships with product manufacturers and sells directly to customers at Monoprice.com. The Monoprice product catalog exceeds 5,000 items across multiple categories. Site traffic is 80% organic, and an impressive 40% of visitors arrived at Monoprice.com via direct navigation. The company is based in Southern California and operates a distribution center adjacent to its corporate offices. Monoprice operates in large markets that are rapidly moving online. Global consumer electronics is a $300 billion market, growing at single digits. The $37 billion online subsegment is forecasted to grow 15% annually through 2016. Monoprice has a passionate and dedicated customer following. Roughly 70% of customer reviews give company products a 9 or a 10 rating. Our survey of customer promoters versus detractors revealed phenomenal Net Promoter Scores of 86 out of 100. Customer advocacy is truly a competitive weapon for Monoprice. Monoprice products span categories like audio, video, cables, networking, mobile accessories, wall mounts, and home video. Monoprice curates its SKU catalog in accordance with strict price and quality standards, and has moved into new categories with discipline over time. Monoprice deploys a differentiated model that eliminates many of the links in a traditional supply chain. By direct sourcing from manufacturers, selling directly online, and fulfilling from a central automated warehouse, Monoprice brings quality products to customers quickly and at considerable discounts to traditional retail. Monoprice product managers collaborate with over 150 manufacturers in Asia to rapidly respond to new market opportunities without committing significant upfront capital. Monoprice is growing at an impressive clip, catalyzed by the arrival of the current leadership team in 2010 and 2011. Gross margin trends are on the rise, reflecting the company's focus on new product categories with large profit pools. We look forward to working with the Monoprice team to identifying future growth and marketing opportunities. Expansion has fueled Monoprice's growth. The current product portfolio includes expansions in pro audio equipment, home theater, Apple and Kindle accessories, and computer accessories. The company will continue to evaluate opportunities for new category entry going forward. Selected other growth opportunities include marketing investment, international expansion, and tailored offerings for B2B customers. The financial benefits of this transaction are compelling. Pro forma for the 12 months through June, consolidated revenues exceed $600 million with adjusted EBITDA approximating $117 million. Pro forma non-GAAP EPS is $2.23, or 14% above pre-transaction levels. Effective for Blucora brings a balanced operating mix of core search and emerging digital franchises. Our capability to invest our capital going forward and pursue complementary acquisitions provides further upside potential for Blucora shareholders. Moving now to our results. Blucora had a solid quarter with strong performance in both of our operating businesses. Search revenue was up 16% from the prior year, driven by growth in our partner network as well as growth from our owned and operated properties. As expected, our software partners continue to transition to the revised Google guidelines, and we expect the impact from these transitions to continue throughout the year. Business momentum is strong in other areas of search, however, helping to partially offset ongoing transitions in our software applications. New partner revenue year to date is encouraging, and our pipeline is strong. The InfoSpace sales team continues to win partner business on the strength of its core value proposition: meta search content, superior monetization, and high service levels. This quarter, we made a number of improvements on the back end of our technology platform to drastically reduce time to launch new partners, improve the quality of our search results, and add customization capabilities to enhance partner monetization. The team recently moved all search network traffic to the cloud, dramatically reducing IT network complexity while improving response times for partner search results. On the O&O side, we improved site user experience and invested marketing dollars against these enhancements. The InfoSpace team continues to execute well. Now moving to tax. Tax Act performance in the quarter was strong, with top-line growth of 19% from the prior year and income up 21%, reflecting a solid finish to a successful tax season. During tax season 2012, consumers continued to shift to DDIY and to Tax Act in particular. Tax Act grew DDIY federal e-files 8% in the season, nearly double the DDIY market growth of 4.4%. The Tax Act team delivered last season with core product enhancements, mobile applications, and new offerings around tax filing. The team continues to evaluate opportunities like the Affordable Care Act and will be investing opportunistically in the coming season. With that, I'll turn it over to Eric for more details on our second quarter financials and outlook.
Thanks, Bill. Let me start off by saying my comments today are limited to the consolidated performance and expectations of our search and tax preparation businesses and exclude any operating results or expectations for Monoprice. With that, let's jump into the results for the second quarter 2013. Second quarter consolidated revenue was $117.2 million and adjusted EBITDA was $29.2 million. Non-GAAP net income was $24.6 million or 58 cents per diluted share, and GAAP net income was $8.4 million or 20 cents per diluted share. GAAP net income reflects a non-cash loss on derivative of $2.3 million or 5 cents per diluted share, driven by stock price appreciation in the quarter. We finished the quarter with cash and cash equivalents and short-term investments of $415.5 million and debt principal of $265.7 million, or net cash of $149.8 million, which is up $23.8 million from the prior quarter. Turning to our segment performance, Search generated $94.5 million in revenue and $17.9 million of segment income, up 16% and 19% respectively from the same quarter last year. Search performance was driven by revenue generated by our distribution partners, which was up $8.3 million or 12% versus second quarter 2012. Revenue in the second quarter from new distribution partners launched in 2013 represented $4.7 million. Revenue from owned and operated was also up $4.4 million as we continue to invest in marketing to drive end users to our owned and operated properties. Segment income margin came in at 19% for the quarter, up 60 basis points when compared to the prior year period. Segment margin expansion in the quarter was driven by gross margin expansion on our distribution partner mix and increased marketing efficiency on our owned and operated customer acquisition initiatives. Moving on to the tax preparation segment, second quarter revenue was $22.7 million, up 19% from the prior year, and segment income was $14.4 million, up 21%. Segment income margin for the second quarter was 64%. Taking a moment to reflect on the financial results of the tax season, pro forma revenue for the first half of 2013 was $88.5 million, and segment income was $46.3 million, for segment income margin of 52%. Versus the prior year, revenue was up 8% and segment income was up 7%. Both a bit softer than expected, which was driven by greater than expected unfunded refund rates, which impacted our software and bank product revenue. Closing on the second quarter results, unallocated corporate operating expense for the quarter was $3.1 million. Let's spend a few minutes talking through our third quarter expectations for each segment. Starting with Search. We expect third quarter revenue of $92 to $96 million and segment income margin of 17.5% to 18%. I would like to provide a quick update on our full year expectations. We expect Search revenue year-on-year growth to be a bit north of the 10% discussed during our last call, and we expect fourth quarter revenue to grow modestly on a sequential basis. We are increasing our full year expected segment income growth to be in the mid to high single digits. Moving to the tax preparation segment. We expect third quarter to generate a segment loss of $2.5 to $2 million on revenue of approximately $1.5 million as we make investments in the off-season for tax season 2013. Unallocated operating expenses are expected to increase approximately $500,000 sequentially due to professional services associated with M&A activity. On a consolidated basis, and again excluding Monoprice operating results, we expect the third quarter 2013 revenue to be $93.5 to $97.5 million, adjusted EBITDA of $10 to $11.5 million, non-GAAP net income of $6 to $7.4 million, or 14 to 17 cents per diluted share, and net loss of $1.8 million to $800,000, or a loss of 4 to 2 cents per share. Please note that our GAAP net loss and EPS guidance does not include an expectation for non-cash gains or losses related to our mark-to-market derivative instruments. Also note the impacts of such gains and losses are excluded from our non-GAAP financial measures. With that, I'll turn the call over to the operator, and we'll be happy to take your questions.
Thank you, ladies and gentlemen. If you have a question at this time, press star then 1 on your touchtone telephone. If your question has been answered and you wish to remove yourself from the queue, you may press the pound key. Again,